Welcome back, everyone, to Not Your Advisor with NYU Grad on Wednesday, April 10th. Today was FOMC Day. It was also CPI Day. Let's jump right into the numbers. I want to start with a quote by a gentleman by the name of Zig Ziglar. He wrote multiple motivational books. He was a World War II veteran. But let's get to the quote. He wrote famously, "A clear rejection is always better than a fake promise." And as I read that quote, I just can't help but think about the Federal Reserve and all of the rate cut mumbo jumbo and jawboning that we've been privy to for, oh gosh, since the 2008 crisis, basically. Um, but let's jump right into it. Lots to cover today. I'm going to start, as I usually do, with the breadth numbers. So today we had 83 new highs and 296 new lows. Pretty different from usually, right? Usually when I do this every day, it's like, 3 to 5x new highs versus new lows. So this is the first day in a while I've seen new highs uh, so low in relation to new. I'm sorry. It's the first time I'm seeing in a while new highs very low in comparison to new lows. We had 1,040. I'm sorry. We had 15% of stocks advancing and 82% of stocks declining today. 50% of stocks were below its 50-day moving average, which is an expansion, and 36% were below the 200-day moving average. So this tells me we lost the 50-day moving average in a lot of equities. All the indices closed near the lows. Looking at the Magnificent Seven, primarily all were red, except for Nvidia, which fought all day to try to climb back up above $850. And Meta and Amazon closed marginally in the green. Meta was up 0.57, Amazon was up 0.15. But you had Microsoft down 0.71%, Apple down 1.1%, Google down 0.3%. Then you had Tesla down 2.9%. Looking at different groups or sectors in the market, all were red except energy. Energy was only up 0.3%. The leading sector to the downside, not surprisingly, were interest rate sensitive sectors like real estate. They were down 4.03% today. Financials were down 1.57, basic materials down 1.52, utilities down 1.33, consumer cyclical down 1.22, and technology down about 1%. Let's keep peeling the onion here. So throughout the day, throughout the morning, I was pretty active on Substack Notes. And just for both premium and free subscribers, I wanted to share some of those Substack Notes in the show notes so that you see value in the Substack Notes section and that you follow me there. So just rewinding time, okay? In the morning, I had posted simply that so approximately like 10:30, I had posted that looks risky to go long here. So we were bouncing after the CPI numbers came in hot, and we sold off very very hard before the open because the CPI numbers came out at 8:30. Um, and we started bouncing after the open, and it looked like it was a bear flag. And I said, it's really risky to go long here. It was like right around not 10:30 a.m. And then we broke down shortly after that. Um, so take a look at some of these posts that I shared on Substack Notes in real time throughout the day. Um, what stuck out, it was the 10-year yield. We are now, and I warned for weeks that one of my uh, parameters or harbingers or signals was the 10-year yield getting above or getting below 4.5%. And either way, flip of a line here, if we're above 4.5, it's risk off. And we are now at 4.55% on the 10-year yield. There are three harbingers, and I'll share them and I'll remind you guys. Number one is yields, the 4.5% demarcation line, and also breadth. As you know, I start each podcast with new highs versus new lows every day. And for the longest time now, throughout this bull rally expansion, we've had more new highs than new lows. The flip side, last summer to August, we had more new lows than new highs. So this is a trend change that I'm looking for. And today is only one day, so it's not a trend change. It's only one day. But today marks the first time in a while we've seen many more new lows versus new highs. The third harbinger or indicator is the Magnificent Seven and the semiconductor group, but mostly the Magnificent Seven, and its ability to stay above the 50-day moving average and remain in good shape. Right now, out of the Mag 7, only Apple and Tesla are below its 50-day moving averages, so nothing to panic over. So of the three signals, we only have one. I need to see two out of the three to be true or change over to the other side for them to be true. So right now we have one. We have yields above 4.5% for one day. Now I need to see yields continue to stay above 4.5, and one of these other two flip to the bearish side. In the afternoon, I think I read a headline that said Biden addressed the media and saying that rate cuts might come in July, so 1 month delay from everyone's expectation of June. The Fed minutes today were more hawkish than expected. So that was the summary of the day, but I want to kind of talk about balance areas, and I posted many times both on podcast and written form just the subject of balance areas. If you look at the ES trading today, we initiatively broke down to the downside off the CPI inflation data. Then we traded sideways in a not a perfect range, but kind of a bear flaggish range. It's easy to tell looking at this, okay, with the naked eye. And it was basically facilitating buyers and sellers on the ES between 512 and 516. From the open or pre-market to open to close. And we just went back and forth. And I want to explain simply so that you can explain this to your children or to your grandmother who doesn't trade stocks. Prices of things can either be in balance or not in balance. That's really it. Or random chop. Those are the three. And we went out of balance pre-market because the CPI data came in very hot. And everyone that had previously agreed upon ES prices prior to this data said, oh, shoot, this is new data. We need to now find another area, which in this case was lower, where we can facilitate trade for buyers and sellers. So we moved initiatively south and carved out a new balance area. And that's all we did today. So we need to watch and see if this range or how long this range will last before buyers and sellers say, you know what, this range can no longer sustain all of the trading of buyers and sellers. We need to either move up out of it or move down below it. And if you take a look at the auction market profile chart of the ES, I am not posting that here, but I want you to be able to start seeing this with your eyes without software. All of the time and volume of this trading area, the balance area, is a bell curve where very few volume of trades and few minutes of trading or seconds of trading occurs at the extremes of the balance area. In this case, like 5:15 to 5:16 on the upper end, and like 5:11 to 5:12 on the bottom end. Majority of trades did not happen there. Majority of the trades happened closer to 5:13 and 5:12 and 5:14. That is the high volume node. It acts as a magnet, and that is why prices go from the edges back and forth through the high volume node. That is all the stock market. That is all any market of anything that is priced for buyers and sellers is. That's all a market is. The second piece, and some of you have emailed me about this because I start, when I share like exponential moving averages or the 50-day or the 200. And again, if you're an institutional trader or if you're a CFA listening to this, I apologize that you have to listen through this. But I also have many retirees or beginner investors and traders who ask these type of questions via email. So I want to quickly distill it without getting too belabored on this. The other question I get often is, why do moving averages work? And I tried to find an elegant explanation of this, and I found it kind of hit me while I was walking my dog. I saw a beautiful Ferrari, by the way, the brand new SUV Ferrari. That's like $500,000. It's all sold out, all the allocations. But, it was parked, but I was walking. It was a red light. And it hit me. It's the same reason why moving averages work is the same reason why traffic lights work. Wherever you are in the world, wherever you listen to this podcast, if you have traffic lights in your city or town or stop signs, it works for the same reason. Enough people are watching these signals and adhering to them. So it's not a rule that the 50-day always holds, but usually it does, because in historical terms it has, and then it sets a precedent and everyone is watching for the 50-day moving average, and when it gets there, everyone's like, oh, it should hold, and then they buy it, and it's like a self-fulfilling prophecy. Is it going to work 100% of the time? No. But it's an elegant way to think about moving average. It's a traffic light. And I have two examples here in the show notes. NVIDIA, today's chart, it right now is above the 50-day, which is the blue line. But you can tell between these two circled areas, the 21-day exponential moving average held support. It was defended a few months back in February, and then we rallied. This time, we failed the 21-day EMA, but as stocks usually do after failing a moving average, it will backtest it. And we are now backtesting the 21-day EMA from the bottom. Now, this whole red light, green light thesis, usually what happens at this juncture is that it will backtest the 21-day EMA from the bottom, the underside. It will kiss it a few times like it did yesterday and today, and it will typically fail to go down to test the 50-day moving average. This is a typical red light, green light scenario. Everyone is expecting this. I'm not saying it's going to happen. We can tomorrow open gap up to 900 for all I know. But the typical motion is we will backtest the 21-day EMA to the upside a few times. We won't be able to get above it, and then we'll sell off and test the 50-day moving average. That's usually the motion in the ocean. If you take a look at the S&P ETF SPY, same thing. Look at this chart. It goes back to right before Thanksgiving. The 21-day EMA has pretty much held support for the SPY all the way up. Every time it goes to 21-day EMA, people is, it's held it before, it's going to hold it again. It's here again, it's going to hold again. It's like a self-fulfilling prophecy. You and I, institutions, everyone that's a market participant is watching the same traffic lights. Similarly, we now are closed below the 21-day EMA on the SPY. Typically, we will backtest the 21-day EMA from the underbelly to the upside a few times, roll over, and then go back and test the 50-day, vice versa. And if we rally from the 50-day or we crash from the 50-day, that's all going to be data dependent, depending on multiple things. But I just wanted to share why moving averages adhere to price levels of support and resistance so often. So that's the wrap up for the free portion of the session. Oh, you know what? What am I talking about? I have a ton of what was weak and what was strong. Let's go through that. All right, so let me get my list ready. These are all percents, okay? So what was strong? DRV, which is bearish real estate, up 11.85%. MicroStrategies up 8.67%. VIX up 5.94%. I told you it was coiling. Kava Group up 5.66%. TBT, which is the inverse of bonds, up 4.49%. REK, which is inverse real estate, up 3.89%. Coinbase up 3.31%. SDP up 3.26%. SKF 3.20%. Those are Tesla. Short ETF TSLS up 2.94%. You had UVXY, it's a VIX bullish ETF, up 2.83%. As you can see, these are all kind of bearish slanted ETFs, all up. What was weak? This list is long. All right, Restoration Hardware down 9.77%. DJT down 8.57%. New York Community Bank down 8.07%. Monday.com down 7.3%. Wayfair down 6.92%. Reddit down 6.47%. DHI, which is DR Horton Home Builder, down 6.39%. Zillow Group down 5.91%. Lennar Home Builder down 5.76%. Beazer Homes down 5.52%. AI down 5.29%. Pulte Homes down 5.19%. Affirm down 5.09%. KRE Regional Banks down 4.96%. KB Homes down 4.91%. CarMax down 4.9%. Extreme Networks down 4.7%. ITB, which is Home Builder ETF, down 4.7%. PaySafe down 4.66%. Toll Brothers 4.62%. Sprout Social down 4.22%. My God, I'm only at fours. TriPoint Homes down 4.06%. IYR Real Estate 4.06%. Birkenstock 3.96%. Shopify 3.92%. ACMR 3.86%. Carvana 3.78%. MGM 3.73%. XHB 3.71%. VinFast Auto 3.66%. Marathon Digital 3.41%. Rivian 3.39%. Ally Financial 3.22%. Smartsheet 3.15%. Russell 2000 ETF, futures contract 2.95%. Intel 2.95%. Tesla 2.89%. Klaviyo 2.84%. NG Natural Gas 2.79%. Yext 2.73%. Roku 2.72%. MongoDB 2.68%. Qualcomm 2.6%. Zoom video conferencing 2.55%. And Zscaler 2.41%. I'm done. If I keep going to 2%, I'll be here forever. So you can tell there was just a big sell-off today. Rather than switching to my usual spiel here, where I say free members, thanks for tuning in, and premium members, please stay on. I think I'm going to make this full episode available to all subscribers. I looked at all of the scanned stocks, and we had a lot of breakdowns, but I suspect we'll know more of the intentions after Thursday. But I do want to go through with everyone the Magnificent Seven. I noted at the top of the show that right now we have Apple and Tesla underneath the 50-day, and they both look horrible. Looking at Apple, we're breaking the horizontal here, right around 168. It looks like we want to go much lower on Apple. And keep in mind, all of the old money is in Apple, hiding out their retirement funds. And they're probably not even watching all of this. Tesla looks really sickly. We're right at the 21-day EMA, but underneath the 200, underneath the 50. But the rest look okay. I mean, Amazon, Google, Meta, all above the 21-day EMA. Microsoft above the 21-day EMA. They're in good shape, but there's just some lacking volume to the upside. I'm not saying it's going to crash, but if it continues to break up, we need to see buying volume. Otherwise, when sellers come in, it's not going to be able to hold itself up. NVIDIA, we held $850 today. It got defended, but we're simply backtesting a falling 21-day EMA. If you were to ask me what is the next Mag 7 that will lose its 50-day moving average, I would guess it's NVIDIA. And if we break the 50-day moving average on NVIDIA, then we'll have Apple and Tesla below. So we'll have 3 out of the 4 potentially under the 50-day. And if yields are above 4.5% on the 10-year, that's not good. That would be 2 out of my 3 harbingers for a trend change to the bear side. Or even if NVIDIA doesn't go south of the 50-day, if we have new lows on the daily basis versus new highs, then that's going to trigger one of the 2 harbinger signals. So with that, I want to thank everyone for tuning in today, and I will see you all after the Thursday session.